data was released yesterday, both for WPI as well as CPI. Both the data was in line with our expectation, and in general lower than the trend that we have been seeing so far. So if you look at the breakup, there is a positive contribution coming from food inflation, in basically implying that the rise in food inflation continues to be muted, and this trend is persisting for the last 2 to 3 months. Going ahead, our expectation on food inflation is that there could be a marginal increase in the month of November because of the financial impact of the demonetization on transporters as well as exchange in the mandis. So this could have some upside to the food inflation. However, post that, once the demonetization impact settles down, we would expect food inflation to remain contained. And of course, the most important reason for that is good monsoon, and there has been abundant agriculture output. Even on the Rabi front, we are hoping that Rabi output will be should be sound, because there is a substantial soil moisture due to the delayed monsoon. So we are expecting food inflation to remain contained. Secondly, on fuel inflation in this month was mixed, in the sense that for WPI there was a marginal increase, and in some segments of CPI it has fallen. Now going ahead, international prices have left us a little confused, because there are times when there's a substantial blip in crude prices, and a few days later it moves up. So we are not very sure as to where fuel prices are heading, but at the moment it looks like the rise may not be pretty substantial. So in general, even on the fuel inflation front, we are expecting it to be contained going ahead. Of course, the key risk for us is in terms of the currency weakness that we are seeing because of the dollar strengthening, and all the emerging market currencies are getting impacted. So is the case with rupee, and of course the added problem with Indian rupee is that there are FII outflows due to medium-term impact of demonetization. So we'll have to see how worse or how weak rupee gets. My own understanding is that it may not be a substantial fall. Short-term blip could be there, but I am not expecting that there will be a significant weakness beyond, let's say, 68.50 to 69 level. So some near-term weakness, but in general we would expect FII flows to return to India, and therefore the currency should start strengthening. And all in all, therefore we feel that fuel inflation should remain contained. Lastly, in terms of the core inflation is sort of inching up. That is in line with the services inflation, as well as the historical increase in the international commodity prices. But going ahead, we would expect it to prevail in the current zone. So there has been a correction in the international commodity prices that should have some positive impact on WPI, and CPI possibly could get curtailed because of this impact of demonetization. So all in all, we are of the opinion that for the next few months inflation should be hovering around the current level, and therefore we feel that there is RBI should be reducing repo rate by 25 basis points in the December monetary policy, and we do see another 25 basis rate cut happening after that. At the moment, it's difficult to set a timeline to that, but in the next few months, we're expecting another 25 basis point rate cut. So all in all, in the next 5 to 6 months, we're expecting 50 bips repo rate cut. More can happen, but that will depend on a lot of factors which are sort of unknown, in the sense that what will be the strength in dollar, how will the rupee respond to that, what will be the FII flows, and of course demonetization, how it's going to play out, how much of liquidity will be there in the system. So we will have to take a call on that once we have some clarity on these factors. But at the moment, it looks like 50 bips further rate reduction should happen. That's about it. Thank you.